Hey, good afternoon. This is Neil of Simpler Futures, and it is the 4th of October, I guess Wednesday, hump day. A little update in the equity complex today, the markets, but I got to tell you, if we just saw the low, we don't know that yet, because we certainly have not seen enough of an uptick by any stretch to be convincing. Not even close. So, as kind of a reminder, what we were talking about previously was an over-under at 43.15, and if it were to continue to break, then we would look for a target down here at 42.30. What has happened so far is that it's traded down to a low of 35.5, so we're 5.5 points. I'm sorry, not 6, 5.5 points away from the idea of hitting that, that 30 number down there. That's one. So hadn't exactly gotten down into that point of control down there. And then the other thing is that the bounce here today is, it's still a lower high. We're still printing lower highs, and so this is still one-time framing lower. If you start from the high on the 29th here, then today's high is only a 50% retracement from that move. Since I chose to populate this fib retracement tool from the high at the 15th, which was really this beginning of this real leg down here. And really this looks like a three wave so far. This looks like a 1, 2, it's only it's only getting started is what it appears. But even from there, today's uptick is not even a 236 retrace, which, by the way, is also 43.15. So today is only Tuesday. Tomorrow there's a little bit of news. Friday is a big number. Friday is non-farm payroll. So whatever I say between now and Friday could easily get, greatly enhanced or absolutely blown out of the water with Friday's number and report, right? We don't know which way that's going to go. I got a feeling if it's a big number, it's going to be bearish for the market. Jolt's report was the timestamp on which, and the reason at which this thing really kind of accelerated this most recent downtick, that Jolt's jobs report. So jobs related data, i.e. reports, do matter greatly right now, as does inflation data like CPI and PCE type stuff. So here's what I can tell you is even if tomorrow is to reach up, since it goes out near the highs up here, so even if it is to reach up, it's got a couple of real milestones up here to contend with before you can even start to breathe easy, thinking maybe we had possibly seen the low of the move down here. So 15 won't do it. 15 will just be a retest of the Jolt's number. That's where it was when the report came out the other morning. It was right there on that report. And above that, you've got this incredibly important, extremely pivotal price at 43.37. Frankly, I'll tell you, I don't think anything matters until we're back above that. That's weekly pivot, but it's way bigger than that. If you snap a horizontal line at that price, go back and look at September for 2 Septembers ago. You'll see that price has been on the board and influential and pivotal and meaningful for whatever reason. I don't know why, but for whatever reason, for a long time. That is a big deal right there, 43.37. So just to crest 15 is just going to be a test of 37. It could easily just, fail right there. Nothing, I guess what I'm trying to say in the short version, shorthand would be, we don't really have anything to even think about writing home about until we're back above that 37. 15, yeah, is kind of a 15 is a big balance print, but so is this 42.30 down here. So you got one balance at 43.15, you got another one down here at 42.30, and we haven't even hit that yet. It only traded 35 on the low. So here's what the bearish case I think could still look like, and that would be a fail at 15, if not 30, if not then somewhere in front of 37, but 15, probably fail 15. For it to fail, I don't even think it'll trade 37. It'd be like a 15 or a 25 type trade that fails. It won't even get up to 37 if for it to reach up and tag something and fail. And then it'll roll over and it'll hit these prices down here. That'll be 42.30, which it has not done yet. Missed it small. I mean, it's not a big miss. It missed it small. And then the value area low of that body of trade back there, which would be 42.05, 42.05 or 4 or something like that. So those would be your still yet bearish, numbers that we could still easily be, looking for. I'll get excited and, kind of change my tune if it gets back above this 37, though. That would be something. If it were to do that, then we may have something to, really think about. Like that's when maybe the picture would change, and we would say, it got really close to that target, didn't quite hit that target, but that may very well end up having been the low, and we're really starting to trade higher. But we don't even have that discussion right now until it's doing something that it's not doing right now, which is well, I say it this way: what it is doing right now is still making lower highs. That has to change. And I'll tell you what really has to change is the dollar has to slow down and start to back off. If the dollar taps out and comes back into a retracement, then the bonds will bounce. And when the bonds bounce, the equity markets are going to bounce because the yields will be coming in. The yields are on an uptick. I mean, the yields are like crazy right now. They are screaming. Trading Economics website, you can see a 30-year mortgage. My goodness, it's like 7.16 or something right now. I looked at it this morning. It's pretty crazy high. Definitely north of 7%. That is no question. And the 10s I looked at yesterday, they were like 4.75 for 10-year yields, and the 30s were like 4.80 something. So it's that's got to change. I mean, bottom line, that's what really matters. And nothing's going to change until that changes. The dollar stops and pulls back into a retracement. The yields come off. The bonds bounce. The equities bounce. Until then, the equities can continue to do what they're doing right now, looking for a buyer, and that's going to be at lower prices until that price is low enough where the buyer comes in. And I don't see it here. I really don't. Typically it looks like something like this day here on the 24th, where we test into a lower price and it's absolutely just refuted, right? I mean, just immediately rejected. It's called an excess low in this point. I mean, if it was on the high, it would be an excess high, but this is an excess low right here. Rejects that, leaves a wick on the bottom, and comes and closes firm at the top. The very next day or two, but really ideally the sooner the better, the top of that is breached and it just takes off. Now that's what a low looks like. Well, I don't see that over here at all. Not yet, so if we saw the low today, then I won't know it until we're back above 37, but I kind of doubt that we actually have, really. So that's what I got, man. That's it. That's it for tonight. Free video for, and then we'll just continue to try to hammer it out in the trade room. We had a good plan, I think, for today. Here's what we're doing today. I had over under in about the 60 area. I think it traded down to 55, and then only T1 traded out today at 42.98. So that's like whatever that is, about 35, 40 points. It got close to this T2, traded up into like 43.04 or something like that. Missed that one by a handful of points, but I mean it was decent run at some of the numbers here today. That's it. That's what I got. You want to come join us in the trade room? Be happy to have you. We trade this stuff all throughout the day, doing exactly candle by candle, during the day is what I'm describing after the fact here today, and then telling you in this video how to, I'm kind of looking forward to what's, what may be coming, next, i.e. how to plan for future price action. So I'll see you again at the next update. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me